Ladies and gentlemen, banks are about to dump billions and billions of dollars of toxic debt. Because unlike many people know, the banking crisis, according to this CNBC report that was over 40 minutes long that I definitely recommend you watching, has put out that says many more US banks are at risk of failing. Also, this week we have massive indicators coming out for the economy and for the markets. Because with this new information, with these new reports coming out, this week is going to be a pivotal time when the stock market has never been more overvalued. But you know what they say, during every crisis there's always opportunity, and in the second part of today's video I'll show you a company stock who is down more than 80% from its peak and operates an innovative model in the gold sector in Nevada and has major 2025 goals. So everyone, we have so much very important topics to cover in today's video, so let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, first things first is this, everyone. What to expect this week in the markets? Well, like I said, it is going to be absolutely huge. We've got the Federal Reserve interest rate decision, which is going to make or break the markets. Some people are even calling that the Federal Reserve may lift interest rates in 2025 if inflation goes up. We've also got PCE inflation, which will definitely influence the Fed. We've got US GDP data coming out, which is going to show us how strong really is the US economy. And we've got earnings from Tesla, Meta, Microsoft, and Apple, which will have huge impacts on the stock market. Because look at this chart here, everyone. This is absolutely shocking. So the top 10 US stocks, look at here, make up 59% of the S&P 500. So when I say the stock market is overvalued, really what I'm talking about is the top 10 biggest stocks, because there is lots of opportunity still in the stock market. But what's really happening is we're seeing monopolies being created in the stock market right now. We're seeing companies take, look at this, just 10 companies account for more than 59% of the stock market, where the next 10 only account for 11%. So we are heading into an economy where there'll just be very few companies that control more and more of the US economy. And we definitely need to reverse this trend, everyone. But not just that, look at this next report. Consumer sentiment declines for the first time in 6 months. And I'll get into that banking report in a minute about how they're dumping billions of dollars of debt. But first we need to understand the picture of what's happening in the markets and the economy, because that will tell us how it's going to affect the banks. So despite reporting stronger incomes this month, concerns about employment rose. About 47% of consumers expect unemployment to rise in the year ahead. This is the highest since the pandemic recession. Now, the current conditions gauge declined to 74 this month from 75.1 in December, while the expectations index dropped to a 6-month low of 69.3. So this is showing people are starting to become more and more concerned about their job and their purchases. Now, separate data on Friday showed that resale market suffered its worst year in nearly 3 decades. According to the National Association of Realtors, 4 million previously owned homes were sold in 2024. This is the lowest since 1995, so the real estate sector is really struggling as well. Now, many economists have warned that tariffs could drive up prices, which risks weighing on consumer sentiment and demand when they are rolled out. This is what I talked about, how this could impact interest rate decisions. Now, the Trump administration is counting on cheaper energy to mitigate any boost in these prices, but there's so many uncertainties if this will be able to be achieved. Now, the survey also showed consumers indicated that they'll buy in advance to avoid future price increases. So I think that's a good idea. If you're worried about prices going up from these tariffs, you may want to get in now. Now, the labor market, while still resilient, has become somewhat a concern in recent months, as it's taking unemployed Americans longer to find work. Now, this happens at the same time that they shrink the federal workforce, which could impact areas with a high concentration of federal workers. So as we can see here, there are very big risks building up in the economy. And now we just got this report for the banks that are about to dump $3 billion of ex-buyout debt. So banks prepare to sell as much as $3 billion of ex-buyout debt. But there's so much more going on in this report as I dug deep, everyone. So X, that is Twitter for all those that do not know. So a group of banks led by Morgan Stanley is preparing to sell as much as $3 billion of senior debt tied to Elon Musk's buyout of X. Now, the social media platform formerly known as Twitter, according to people with knowledge of the matter, banks have contacted a small group of investors to assess their interest in buying chunks of at least 250 million at a discounted price in a range of 90 to 95 cents on the dollar. So this is showing we're seeing increased risk in the debt markets right now, people. And they said this could kick off as soon as next week. But like I was warning about, it gets deeper than that. The approach marks the bank's most significant effort so far to rid themselves of $13 billion of debt tied to Musk's purchase of Twitter Inc. that got stuck on their books in 2022 after the billionaire launched a surprise bid to take the company private. Now, 7 banks, including Bank of America Corp, Barclays, and Mitsubishi and Financial Group Inc., agreed to finance the deal. And I'll go ahead and pull up this chart here. We can see the share of debt commitment. Morgan Stanley and Bank of America are the ones that are most exposed, followed by Barclays, MUFG, and we can see the other banks here have a smaller exposure. But like I said, it's not just exit this is happening. We're seeing a lot of banks that lent out during the easy money period of 2021 and 2022 when the Federal Reserve dropped interest rates to zero, where now all these deals are starting to go bad. So in 2022, Wall Street banks became stuck with about $40 billion of debt for acquisitions that they had underwritten in easy money era. As the Federal Reserve began aggressively hiking interest rates, they had since managed to offload the majority of those deals, but there's still many billions left. So make no mistake, people, the banks are still in big trouble, and this is coming at a time we're about to see big layoffs. Because look at this next report here, everyone. CNN is announcing they're going to lay off about 200 employees in attempts to modernize their business. Now, CNN announced it is laying off 6% of its staff, or about 210 employees in a memo, and NBC News is planning layoffs this week as well. Now, you could say this is due to the economy or due to how bad CNN's ratings are, but we're seeing a lot of the easy money era and a lot of these zombie companies that shouldn't have survived, well, they're now finally starting to collapse. But like I was saying earlier, everyone, during every crisis, there is always opportunity. And what we're seeing right now is a huge opportunity in gold. And guess what? It just hit a new all-time high as many fiat currencies are starting to fail. So look at this report here. Gold hits near all-time high amid dollar weakness and Trump talks tariffs and rates. So spot gold rose as much as 1.2%, reaching its highest level since the Halloween pre-election peak of $2,790 per ounce this Friday lunchtime after recovering a $10 drop in the previous session. But we've just got a new report on exactly what China is doing, and it's going to blow your mind. Well, look at this, everyone. China secretly buying 10 times more gold than they originally published. And why are they doing this? Well, recent data is already bearing out a crucial piece of Goldman's research into central bank and institutional gold purchases in London for the OTC market, over the counter. That showed a massive 64-ton purchase in October. That's far above the pre-2022 average of around 17 tons. And most surprising is that China appears to be the largest buyer, accounting for 55 of those tons. Now, why is this remarkable, you may ask? Well, because Beijing's official report stated that they added only 5 tons that month. That's a tenth of what Goldman's analysis suggests. And the freezing of Russia's foreign exchange reserves 2 years ago also appears to have been a warning for central banks in emerging economies. It emphasized the importance of holding reserves that are far beyond the reach of foreign governments. And this is what I've been talking about, everyone. In other countries, like for example the Australian dollar, gold is up 40% over the past 12 months. And I think we're easily going to see gold hit $3,000 per ounce in the US. But what you may not know, while gold is at all-time highs, we're seeing a huge arbitrage trading opportunity here, with gold mining stocks being severely undervalued. But now Donald Trump's in office, and with him saying drill baby drill, we're going to see a lot more favorable conditions for gold miners. And we just wrapped up Donald Trump's first week in office, and it's abundantly clear America is back. No playing around, no kicking, and no relaxing. This administration wants to make sure no one ever threatens America again, and that includes national security concerns like mineral mining. Therefore, gold stocks are now starting to erupt. As these charts that I'll show today suggest gold stocks are historically cheap beyond recognition. And today's video sponsor, Nevada Canyon Gold, that's US ticker symbol NGLD, is doing business in the world premier jurisdiction, Nevada, executing the most cost-effective model, royalties and streaming, and deploying these in a first-to-market strategy. Now, the main reason I'm profiling it today is because the stock fell 85% during Biden's reign and has recently bottomed and has now started a clear uptrend. Now, look at the appreciation: 273%, 553%, 596%, and 1,330% achieved in previous mining stock bull markets. And I think we're about to approach another one. Now, Nevada Canyon Gold seeks to unlock the untapped potential of Nevada's legendary mining districts. With a unique business model and a strategic focus, Nevada Canyon Gold is redefining how royalties, streaming, and exploration. Now, Nevada is the gold capital of the United States, accounting for 76% of the nation's production. Nevada Canyon's innovative approach avoids the high capital costs of mining operations by focusing on royalty and streaming agreements. The company secures rights to production while maintaining low overhead. And this scalability model ensures steady returns without the risk and costs associated with traditional mining ventures. Now, the company's CEO has driven the roads of Nevada's gold mining regions for the past 30 years and worked with the world's biggest mining companies, and his database of projects in Nevada is as good as it gets. The innovative royalty streaming and exploration accelerator model the company is implementing is one of the first in the mining sector. Trump's deregulation in the mining sector would also lower costs and expedite project approvals, making US gold miners more competitive, and which is why I'm profiling Nevada Canyon Gold. Because look at this, gold stocks are down 73% since 2011, while the spot price of gold is up nearly 40%. And this is what I call a screaming opportunity in gold stocks. How can the metal be up 40% since 2011 highs and miners down 73%? What a massive opportunity in my view. Now, history says the next move for precious metals could be blinding because gold has broken out after a 4-year consolidation, and the new administration is bringing back industry to American soil. Today, a number of the most promising gold projects in Nevada, for instance, are owned by companies whose share prices are down 85%, sometimes even 95%. Robert List, governor of Nevada from 1979 to 1983, joined the board of directors at Nevada Canyon Gold, again that's US ticker symbol NGLD, and List has been appointed to boards and commissioned in the administration of presidents like Nixon, Ford, Reagan, George H.W. Bush, including the National Public Lands Advisory Council. I know of no better way to build a successful mining business than to follow the most important rule: buy when there's blood in the streets. Gold royalty companies have consistently delivered exceptional returns, cementing their place among the best performing stocks in history. Their success lies in a unique business model that combines the upside potential of gold prices with reduced operational risk compared to traditional miners. So go ahead and start doing your homework on this new royalty streaming exploration accelerator company, Nevada Canyon Gold. Because think about this, Nevada Canyon Gold is down 80% from its peak market cap and has bottomed recently and began its uptrend. It is a pure play in Nevada's gold just as President Trump comes in with a pro-business, pro-mining approach. And its business model is superior with a revolutionary approach to royalty streaming and accelerator. But most importantly, gold stocks are cheap historically. Gold to equities ratio, mining equities are still trading at significant discounts to the previous bull cycles such as 2011 and 1980. Now the price to cash flow, many gold miners are trading at multiples between 6 to 10, significantly lower than the broader S&P 500, which often exceeds 15 to 20. And in 2011, the gold peak, miners traded closer to 15. So go ahead and start doing your research on Nevada Gold. Again, that's US ticker symbol NGLD. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.